Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions for May 28, 2017. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 1.30 rose from 0.98 last week, advancing back into bullish territory. The total count of securities in bullish or bearish patterns was virtually unchanged at 3,134. The count of bearish stocks decreased 14%, while the count of stocks in bullish patterns increased 14%. The Pirls P&F Market Breadth Summary Chart shows us a market now 1 week in bullish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly Pirls Stock Market Commentary via email free of charge, simply enter your email address in the space provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 52 points for the third advance in 5 weeks. At a positive 92.7 points, it continues below all 8 tops above plus 100, and it continues above all 5 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 3 accumulation days and 1 distribution day. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on higher average daily volume. Momentum, now at a positive 177.35, up from a positive 15.52 last week. The CCI 20 daily uptrend and zero-line reject long trade simulation continues. At Friday, 5/19 close, after 2 days below zero, it formed a valid zero-line reject long entry signal for Monday, 5/22 open. We will continue to follow this trade simulation in next week's commentary. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 56 weeks ago, while the daily CCI 20 began a Woody's uptrend 27 weeks ago. The CCI 20 weekly has risen to a positive 161.57 from 125.40 last week. We await the return of the CCI 20 weekly to the plus or minus 50 range for another potential trade. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: some tech and REITs on top, oil services, oil, and banks on the bottom. Bullish: semis continues in the top 5. Disk drives and REITs have entered the top 5. Networkers and brokers have left the bottom 5. Gold and silver has left the top 5. Oil and oil services have left the top 5 and entered the bottom 5. Bearish KBW Bank has entered the bottom 5. Focus this week from www.zerohedge.com. Carson Block says law of economics dictate China will face Day of Reckoning by Tyler Durden. The following are some key points and charts. Muddy Waters research founder Carson Block believes that China's over-leveraged economy will eventually face a day of reckoning. He just can't say when. Betting against the Chinese stock market in aggregate could end up being a widowmaker play, like shorting Japanese government bonds was for several years. Instead, investors should bet against individual firms or sectors, a less risky option in Block's view. There are many Chinese companies that somehow manage to keep going even though the financials suggest that they're doomed. Understanding which companies have the guangxi, a Chinese term meaning business and political connections, to enable them to continue operating, and which companies don't, is the most challenging aspect of betting against Chinese firms, Block asserts. The argument that the Chinese government will be able to pull off a, quote, soft landing, end quote, while successfully transitioning from a manufacturing-powered to a services-powered economy, is predicated on the view that Xi Jinping and the Communist Party exercise absolute control over the economy and have near unlimited resources to help them thwart an economic collapse. Block says this assumption, common among Westerners, is an example of cognitive dissonance often applied to the PBOC. Even though many Westerners believe it to be true, China's central bank isn't some all-powerful monolith, Block contends. Quote, "These guys are no more capable than our policymakers in the U.S. have been. The U.S. government has the most power in the world to avert a major economic catastrophe." End quote. The Chinese yield curve experienced a double inversion this week when 3-year yields eclipsed 5-year yields and 7-year yields eclipsed 10-year yields. At the same time, rising base funding costs and interbank credit risk concerns have pushed banks' cost of borrowing beyond the rate they charge customers for loans for the first time in history. The 1-year Shanghai Interbank offered rate has exceeded the loan prime rate, the first time this has happened since the latter was introduced in 2013. Meanwhile, China's total debt to GDP has reached all-time highs. Moody's Investor Service sent offshore yuan tumbling earlier this week after it downgraded China's credit rating to A1 from AA3, saying that the outlook for the country's financial strength will worsen, with debt rising and economic growth slowing. This leaves the world's hoped-for reflation engine rated below Estonia, Qatar, and South Korea, and on par with Slovakia and Japan. Thank you for watching this week's Sand to Pearls Stock Market Commentary video featuring the proprietary bull-bear point and figure market breadth summary chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant, relaxing Memorial Day weekend, that you are looking forward to a prosperous and productive, if short, week coming up, and wishing you true success.